Hi guys, this is Ms. Morgan, and we're going to go over a bank reconciliation. At the end of the month, the bank is going to send us a bank statement, and they're going to tell us that we have $9,350 in our bank account, and that is for the end of the month. The balance per the company's record is $8,510. When you look in the general ledger, you're going to see your cash account, and you'll look at that number to see what your balance is per your company's records, or the balance per the books. And we're going to fill out a reconciliation to come to an agreement on how much cash we actually have. So the first thing we'll do is fill out the cash balance per the bank statement, which is 9350. And then we'll fill out the cash balance per company's records, which is 8510. Now there are some things that we wrote down in our checkbook that we've already made a journal entry for that the bank doesn't know about yet. And then there are other things that we have not created a journal entry for, but it's on the bank statement, so we're going to have to adjust our books for those things. So we're going to look at these 4 items and discuss these. When we're adjusting the bank statement, the first thing, the balance per bank, the first thing we need to do is we need to add any deposits in transit. Now I've added the word pending here because with internet banking you are aware of the word pending, and that means it hasn't gone through yet. And so if we made a deposit at 5:15 p.m. at a bank that has a sign that says deposits made after 4 p.m. will be made the next business day, well, if that deposit was made at the last day of the month, then the deposit will not show up on this month's bank statement. It will show up on next month's bank statement because it's pending. So what you're going to do is, if they give us an amount for deposits in transit, we'll add it. So $2,350 was a deposit in transit. And so what we'll do is we'll add those 2 numbers to get our cash balance after we add our deposits in transit. Then on the balance per bank, we'll take out any outstanding checks. Now, my face-to-face students always ask me, what is an outstanding check? Well, an outstanding check is a check that you have written that has not made it to the bank yet. It's in someone's pocket or at the bottom of somebody's purse, but it's standing out there somewhere and it has not made it to the bank yet. However, those people holding your check have a legal right to your money, so we have to subtract that out. And here it says outstanding checks total $5,100. So we'll subtract that out. So our answer here will be this minus this is $6,600. So when you're looking at the bank statement, the balance per bank, you're going to add deposits in transit, deduct outstanding checks, and then if the bank made a mistake, you would add that correction here or subtract that correction here if needed. Now we're going to look at the cash balance per the company's record, which would be from the ledger. Now ideally, your adjusted balance should equal the same for both sides of this transaction. If it does not, then you made a mistake and you need to do it again. So right now, the cash balance from the company's record says that we have $8,510. Now we've already covered the deposits in transit and the outstanding checks, so we have 2 things left to cover: a bank service charge and an NSF check. Well, when we have the balance per company's record, the thing that we'll add here is any money, collected by the bank. And in this particular problem, there is no money collected by the bank. The example in the book talks about a notes receivable being collected. And if the bank did collect money for us, we would add it here to our checking account and to our cash account. Then we would deduct any bank service charge, which we do have one of those for $35. An NSF check means that you have a customer that owed you money. They wrote you a check because they were paying you on their account, and now that check has bounced. It's called an NSF check, and that means non-sufficient funds. So you've got to take that money out of what you thought your cash balance was because you don't really have that cash. If you made a mistake in your journal when you created those journal entries during the month, you're going to have to correct that. And if you transposed a number and you took out too much cash or didn't take out enough cash, you'll have to add cash here or subtract cash here depending on the era and how you need to correct your mistake. But in this particular problem, we don't have any bank errors or book errors, and so we don't have to deal with that here. So now we've dealt with all 4 of these items, and you see here that our new balance, well, I've got to do the math, is this minus this is $6,600, which is the correct balance. Any adjustment to the company's record is going to require a journal entry. Normally, there's one journal entry for any additions to cash, and there's one journal entry for any subtractions to cash. And so, what you'll do here is you'll debit miscellaneous expense for this bank service charge for $35. You'll debit accounts receivable because this bounced check means you'll credit cash for $19.10. When you credit cash for $19.10, then your new balance of cash in your books equals $8,510 minus $19.10, which will equal $6,600. So that means that your bank reconciliation is correct, and this is the amount that you will use for cash when you create your balance sheet at the end of the period.